Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, PIFinancial.com and PolarFuturesGroup.com. Welcome back to the show, Drew.
Thanks for having me on again, Jim.
Drew, it seems like many markets have paused, moving in only a small range over the past month since we last talked. What do you think the cause of this is?
Yeah, I think it's very important to recognize that. I mean, outside of the NASDAQ and really a handful of companies, a lot of markets have sort of just hit pause. The S&P, it's been about a month and a half now, has really been in a 250-point range, and while that is a wide range, has just been choppy, but largely going sideways. And I think that really illustrates the uncertainty of what we're facing, of what's going on. Do we have more stimulus coming? Do we not have more stimulus coming? Has all the stimulus that's already been given out been too much, and therefore equity prices can go a lot higher versus what the economic impact has been? You know, did we already get through the economic impact? A lot of the economic numbers that we see coming in are having very strong bounces back. So, you know, we really had March and April were terrible economic data months. But since then we've had May and June looking better. And as we go into July, you know, I think the market is trying to assess, you know, have we done enough? Have we gotten through the worst of it? If we've gotten through the worst of it, then, you know, clear sunny skies ahead, and we've, you know, got a whole bunch of stimulus that we've received over the last couple of months still helping things along. So, you know, as we've gone through this period, and I think more importantly, started to see some more risk in the case counts in the U.S. starting to rise, more state economies starting to sort of re-shut down, I think the market's trying to determine, you know, how much of an economic impact that's going to be if we're not going back to the full lockdowns that we were seeing before. So I do think this pause has been the market really stopping to take a breath and say, you know, we collapsed incredibly hard and fast as the full lockdowns hit. And then as we thought things were going to get better, we came, you know, rocketing out of those March lows on the equity fronts and a lot of other markets as well, very, very quickly. And, you know, it's obvious that we can't continue at that pace because, you know, that would just be absolutely crazy. But I think the market now is saying, okay, we've consolidated, but where do we go from here? And I think it's that unsure footing that's giving us this longer consolidation period than maybe we thought we could see. It's still my view that while we've had, you know, a lot of the stimulus create a bit of a financial holiday, I'm calling it, for a lot of consumers, I think there's some economic hardships to come. I think there's going to be businesses that really don't come back from this no matter how much extra stimulus has been given. You know, I think there has been a shift in the way that we work, with more and more people willing to work from home. So, you know, businesses in downtown cores may struggle more than they did prior to this. So I still think that there's been just a tremendous amount of looking on the bright side that we've done to get to this point. And I think there's still going to be a bit of a bite of economic reality, and an equity market that largely has been pulled up by, you know, a few very large names that, yes, do have the potential to continue to create profits going forward. But the rest of the market, to me, looks like it's struggling, just running out of energy. So I mean, I think I said the exact same thing a month ago. Obviously, we got right back here to the June 8th highs. We were just below those when we spoke a month ago. But to me, the fact that we've run out of energy tells me that maybe we are due for a little bit of a correction lower. So I'm waiting to see if we can't see that or not. But I think this pause is telling us that, maybe things aren't as rosy as we want to see. And again, even today, getting some good news on vaccines this morning that sort of popped the market up. Throughout the day, we weren't able to see any follow through to the upside on that. So again, when you start throwing what should be good news at a market and you're not seeing that bullish price action, it's telling me that things are maybe getting tired of going in that direction. So again, I'm still looking for downside risk in this market, but again, it's been a very slow moving trade and one that's been on pause for a while now.
How big of an impact have these amateur traders who got in after the market crashed and were stuck at home because of the lockdowns? Are they going to pull their money out when they start losing money? Are they going to pull it out when sports betting comes back? Or have they been much of a factor at all?
Yeah, I think they definitely have been a factor. There's definitely the sentiment, and they've seemingly had a very strong willingness to come in and buy some dips. So again, they're not the biggest player in the market. There are a lot of them. So when you combine all of those players, I do think it makes an impact. And sort of the price or the way that we always say it in commodity markets, especially is prices are set with the marginal buyer and seller. So if we created more of a marginal buyer or seller that's willing to maybe chase things when they're running higher or buy in when they're selling off hard, again, I think that can have a big impact on the sentiment of the market. Where I'm also thinking that it could have an impact is, again, a lot of these newer traders have come into the market, since the beginning or middle of March, and they've really only known an equity market that goes higher. So again, they've been trained and have been rewarded for it. That when you see, the S&P come off a couple hundred points, it's a great buying opportunity. Load up on the names that you like, and away they go again to new all-time highs. Some of the big companies, the biggest companies that they've gotten behind, have done tremendously well, and that's where I do also think that maybe we don't necessarily need a catalyst other than some price action itself. Where if we get a negative day or two, that you might see some of these new traders that have been taught to buy, and when they come in and buy that dip and it goes lower, they might give it a day or two, but then you can see maybe some of that selling start to reinforce a downtrend as well. I mean, the NASDAQ has not had, the NASDAQ futures is what I trade. The NASDAQ futures market has not had 2 down days back to back since May 13th. So that's been over 2 months now where we haven't had back-to-back down days in the NASDAQ. So again, traders are being taught a lesson and being rewarded for buying those sell-off days. So, it will only matter sort of when it comes to matter if you get a few days selling, and then I think we could see the impact of all this retail buying over the last 3 months that may have to become sellers. And again, when you're making new prices at the margin, that selling can make a difference.
We'll have more with Drew Zimmerman right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, what direction do you see markets going from here?
Yeah, as I touched on earlier, just before the break, again, it's been a large pause, but one that I think is showing us some level of exhaustion in a lot of the big names that have really pulled this market higher. Some level where we're seeing, a lot of the stocks that make up the indices, not doing all that much better or having run up in the beginning of June and actually trading lower from there. So it's my bias as of now to say that, I think we can still break lower out of this consolidation period. I think the reopenings haven't been going as well as we had expected or hoped. And I think, the market has priced in, a bright and sunny future into the fall and into next year. And I just don't think we're seeing that. I think we're really going to have more of an economic bite to what's going on. And I mean, we may get a little further pop if the U.S. Passes a further stimulus bill, which is likely due in the next couple of weeks, given that their current stimulus bill will be running out. So maybe that helps hold in this market sort of sideways move a little bit longer. But I am looking for a correction lower from here. Some of the moves in some of the big names, everybody's watching Tesla, of course, but I mean, it goes a lot further than that. I think have just gone way too far, way too fast. So I think if they have a reasonable correction, the rest of the market that's already not doing as well is likely to have a further pullback as well. And just the overall indices are, I think, likely to have a pullback from these levels.
We'll have more with Drew Zimmerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Drew Zimmerman. Drew, oil prices have been incredibly volatile over the last few months and even went negative a couple of months ago. What do you see going ahead in the oil market?
Yeah, I watch the oil markets very closely, and just like the equity market and other markets that I follow, we really have been sort of in pause mode over the last month and a half, where oil's been in a small range of a few dollars over that time period. We are at the very sort of high end of the range on front month oil right now, but I think that's been a sort of a confluence of factors that has really helped oil stay up. One has been we did get some sizable production cuts from the OPEC and OPEC Plus members. That's really helped stabilize the market, give the market a little bit of confidence, especially after we'd gone negative and the confidence was really shaken in the oil market. We've also had the U.S. production number come off about 2 million barrels from the high, so that's helped support prices as well. But I think one of the more interesting ways to look at oil, and in a way that I'm really looking at it right now, is an oil spread sort of trade, where I'm looking at 1 month of crude oil versus another contract that's 6 months out. And I think one of the other supportive aspects of crude oil is when we went negative, it was a big story on we were going to run out of storage in Cushing, Oklahoma, which is where the WTI contract is delivered to. So as we were running out of storage, people were saying, what is a barrel of oil worth if you have nowhere to put it? And that's where we got extremely negative prices. That was one of the factors. So then we had the federal government make available for commercial lease space in the Strategic Petroleum Reserve. Trump had originally wanted to buy oil for the government, but couldn't get the financing through Congress, so they decided to lease that space. So 9 of the big oil companies leased 23 million barrels worth of space, and they were using that space to sort of siphon oil away from Cushing, Oklahoma. They've now filled over 21 million barrels of that 23 million barrels that they had leased. I think that is running out, and we've seen in the last 2 weeks, we've actually seen a build in Cushing, Oklahoma again. So given the fact that overall oil storage is still at very high levels, especially if you're looking at the averages over the last 5 years, so we've got a lot of product in storage already. Now we've got this extra over 21 million barrels of commercial oil sitting in the SPR, and we're going back to fill up the Cushing storage again. So I think we could be seeing the start of what's going to be another storage worry sort of story develop as we see Cushing, Oklahoma start to fill. I think that's because gasoline demand, while slowly picking back up, may run into some problems again as a lot of these states are doing more to close down again. So I don't see that gasoline demand jumping back as much. We also had an OPEC meeting today where, following their schedule, their 9.7 million barrels of production cuts that they had in place is going to get reduced to 7.7 million barrels. So there's an additional 2 million barrels coming online from the OPEC Plus group. So I just see a few things adding up, but mostly the thing I'm watching is going to be this storage story that's going on within the United States. And again, I think the best way to play that is not the oil price outright, although I do think that would be negative. I think it will be more negative for the front month oil prices. So that's where I'm playing it with an oil spread, where I'm not going to be hurt as bad if oil prices were to continue to rally on something that I don't see coming. So that's the way that I'm looking at the oil market right now. I think that's a developing story that we're likely to see over the next few weeks. But again, I think it's been also part of this broader economic sort of hope that has kept oil prices higher, and the best gauge for that hope is, for me, the S&P 500. So the S&P 500 being at its recent highs is helping oil be at its recent highs as well. But again, as everything trades together, I would expect that we could see oil prices move a little lower. I mean, conservatively, I think, maybe retest the 34, 35 sort of area. And if we really did run into a storage story, maybe its front month drops back to $30. But that would be more on the extreme end of things.
If oil goes down in price, will that drag the Canadian dollar down with it?
Yes, I do think it will have an impact on the Canadian dollar. Canadian dollar's stronger today, but still only able to get back to 74 cents. We had been at 75 cents about a month ago. I still think that there's more negatives facing Canada. I think we were coming into this COVID crisis on a bit of a softer economic footing. We've, of course, had some downgrades of the Canadian debt markets as well. So maybe a little less flows into our bonds. And again, we've got more bond issuance coming, just like in the United States. So again, maybe a little less flows from international countries if our debt is going to be continued to be downgraded. But the oil impact for sure will have an impact on the Canadian dollar, but just as all the other markets go. And I mean, it's hard to believe it, but I mean, if you were to look at a daily chart of the S&P 500 and, take it away and then put up a chart of the Canadian dollar, the Australian dollar, the oil market, a lot of other markets, you can see that the charts, largely look the same. So again, I come back to the overall economic sentiment that we're seeing out there is really dictating a lot of markets, and that's where we're seeing the correlation to the S&P, very high across a lot of different asset classes. So I think it would take another sort of negative turn in economic sentiment, and to me, again, the best gauge of that is the S&P 500 to really help move the Canadian dollar lower. But, having oil move down $5 to $10 would definitely move the Canadian dollar lower as well. So I think there's a few fronts where, for me, at 74 cents, especially if it were to move up, that 74 to 75 cent level in Canada is still a very good sell. I think, we're likely to maybe retest the the low or sort of 70 level on the Canadian dollar. And in the coming months, as again we maybe get a little bit more pessimistic about the future of the economies rather than being overly optimistic where I think we are right now.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim. It was great.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. If you have any questions for Drew or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.